My name's Terry Corby. I'm the founder and CEO of something called Good Business Pays, and we've been campaigning for, bringing an end to late and slow payments to small businesses for about 5 years now, and we're doing okay, but lots of work still to go. And one of the questions that is sort of puzzling us at the moment is, given that we are supposed to be now in a digital age, why are small businesses still struggling to get paid? I give some presentations on culture where we show newspaper cuttings where journalists have said, isn't it awful? Companies are now waiting 70 days to get paid. They were from 1981 and the 1990s. And since then, the law has changed. Regulations have been stiffened. We've had a small business commissioner. We've had codes. We've had regulations. And we've had digital. And now we have companies paying over 100 days. So something's going wrong. And we've got an expert panel of folks to help us maybe answer that question, or what I'm hoping is will involve you all in telling us why there's a problem. But to join me from here, we've got Chip Mahan, and I think is the global head of payments for Sage. We've got Liz Barclay, who's the small business commissioner, and we've got Adeel Hyder, who's the managing director from Starling for small business banking. So a great panel, and it's a big question, right? The big question of why are we still getting paid late in a digital first age? So I'm going to start actually with that big question to see what we get. Why in this digital age do we think small businesses are still having difficulty in getting paid on time?
Yeah, I think when we look at it as a business problem, clearly late payments is one of the things we hear from our customers all the time. And as much as we've created digital capacity in terms of workflows and capabilities through payment portals, through Pay Now links, and all the other things that you do to try and manage that electronically and digitally, I think at the end, it still comes to the payee, right? It comes to the business that's bought that goods or those services, and why are they paying late? So I think really we need to turn the question around a little bit in the sense of, why is it that the consumer of the good or service is paying the business late? And I think part of that falls into, which is something we've talked about before, which is one of the biggest challenges business owners, and that we hear from them as well as from accountants about their business owners, is cash flow. It's one of the main things that keep them up at night in terms of how they run their business. And so when you think about late payments, cash flow is a critical element of that. And so I think you'll find that a lot of businesses will use that tactic to pay at the very last minute of the cycle before the payment actually would have some type of negative consequence.
Okay. And Adeel, I'm going to come to you, Liz, in a minute, because after you've heard these views from the business world, Adeel, from the banking perspective, do you have a similar perspective, or is it different?
Yeah, really similar. I think one of the main things that we hear from customers is very much around the inability to access this stuff in one place. So it's very fragmented. So a lot of the tools that you have, whether it's some of the payments tools, whether it's the invoicing tools, whether it's the payment flows, like they're in different places. And alongside that, you have to invest a lot of time, or they perceive that to be the case, to actually figure out how to use these things. And so as a result, you kind of talk yourself out of it, because you're like, well, I have to go to a lot of different places and I'm going to have to spend a lot of time figuring this stuff out. I don't have that kind of time. So there is a better job to be done on bringing this into like a single place or as part of the flow of what they're doing, and making it clear that this is like a few minutes of just getting set up. It's not that hard. And showing that, or making that the case, because I think unless you've done that, you're not going to really crack it. The other bit is that the other key bucket is that the benefit isn't immediately clear. Like, you'll see higher adoption for invoicing than for other things. Why is that? Because the benefit is clear. You use invoicing, you get paid, right? What's the benefit of paying someone sooner, or what's until you really bring that benefit out very clearly, it's not going to get the adoption.
Yeah.
So I think it's a combination of those things that leads to,
And I probably will ask anybody in the audience soon if they have any examples of the benefit of getting paid faster. we often talk about the problems that are caused by slow payment, which in some ways are obvious. But what is always difficult to tell is the story of what happens when a smaller business gets paid faster. What's the so what? Did they take on more people? Did they buy new machinery? Did they grow? Because I think even if big business can understand the business reason for paying faster, then there'll be more faster payments. Liz?
How long have I got? I'm the Small Business Commissioner for the UK, and I've been in this role for 4 years. Terry and I have been working really closely together. And we are seeing improvement, definitely, in the number of invoices that are paid after the agreed period of time, after the agreed terms, because technology is being embraced more, both by the bigger companies, onboarding their suppliers onto their systems, and by the suppliers. However, I would take a step back, because it's not just about overdue invoices and overdue payments. It's also about poor contractual payment terms. And this is where companies see cash flow and wanting to hold on to their cash as being really important when the economic situation deteriorates. And so when the economic situation deteriorates, rather than be overdue their payments, they extend the contractual payment terms. And what we need to do is to get small businesses to be brave enough to say, absolutely not. I can't wait 120 days to be paid. I have to be paid much, much sooner than that, because otherwise I won't have the certainty, the cash won't be coming in, I can't invest, I can't improve the products that I'm selling to you for you to sell on to your customers, and you, the big business, may not have me as a supplier because I may go bust if I have to wait 120 days, and you may have to go and look for another supplier. And I think that if big businesses understood more, and they certainly did understand this increasingly during the pandemic, that small businesses might go under and they'd have to find another supplier, and that takes time and effort and human resource, etc., they might nurture their smaller suppliers in the supply chain better, because this is all about relationship building. It's about stewardship of your supply chain. It's about working in partnership. It's not just about digital, but if digital can help that to happen, which I think most organizations would agree it can do, then it would be great to get everybody to do a bit more investing in the digital transformation. At the small end, embracing it. But if you've got, I've run my own business. Who here has run your own business? And you will know that if you run a small business and you're really lucky, you may have 6 different customers you work with. Now, if that means 6 different systems, I haven't got time to get on board with 6 different systems. I'm worried it's going to cost me money to get on board with 6 different systems. As the customer with a deeper pocket, I would love you to onboard me at no expense and no time commitment from my point of view, because I'm a small business and I haven't got time to work out what's the best option. I haven't got time to go through it all at 3:30 in the morning. I need proper support, and I haven't got that. I don't know the questions I need to ask. So we need a lot more partnership and stewardship between the big businesses and the small businesses, and the digital companies in the middle are doing an absolutely fantastic job, but there's an awful lot more that they could do, and that's where my head is going next. But we've got to get the contracts much better at the start, so that we don't have these 120-day payment terms. And just one more thing, Terry. Within big companies, the procurement department doesn't know what accounts payable does. The procurement department tells me I'll get paid in 30 days. Accounts payable pays in 30 days, but the approval system in the middle takes 180. Come on. That's nonsense. You don't need a 20-point approval system if you've got the technology. So there's a lot of work we can do in the middle.
So whose job is it, Liz, do you think, to make sure that you get the right deal in the first place? Because it's very hard when you're a small business. You're suddenly offered this contract with, I don't know, Disney or whoever it happens to be, who says, you can come and do this stuff for us. But very often, of course, they'll feel the terms are dictated to them because of that power imbalance, the size between the big and the small customer. Is there a role, for example, dare I say it, for the
Yes.
business advisors, and it's one of the reasons why we come to account, for the business advisors of small businesses to help them through that process because they may not have done it before or may not have confidence?
Yeah. I think so.
Yeah.
I think there is a role for business advisors, and accountants are the business advisors that most people decide to pay for when they're running a business. Not all small businesses have accountants, I get that.
Yes.
But if accountants were doing a lot less tax compliance and a bit more of the advisory stuff, they'd be saying, and you probably all are, that's why you're here, but I do know a lot of accountants don't ask about how do you get paid. And if you could ask, how do you get paid? Can I see the contract before you sign it? Can I help you with the negotiation of a better deal on that contract? I really do think that would help. But
Yeah.
I have come across small businesses that don't know they're allowed to push back against a bigger business contract. They don't know that legally they have the right to negotiate.
Yeah.
And it takes an awful lot of courage to say, Chip, I'm sorry, I don't want your 90-day payment terms. You need to pay me in 30, because you might give the work to Adeel. And then I get cut out of the middle and I lose a customer. So we've all got a role to play in this.
Yes.
We've got to get the message across that actually it's okay to negotiate. And big businesses quite often tell me, nobody's ever asked me that.
Yeah.
So we've got to somehow or other get across this fear problem. And that takes mentoring, and accountants and bookkeepers are really well placed to help with that.
Can I just get a show of hands? Who is in the accounting profession here? Sort of account. Yeah, lots of people. And of those folks in the accounting profession, how many also do some kind of business advisory, either do it or would like to be doing that kind of work as well? Just some. But I think this is one of the things that we struggle with, and I'm going to ask Chip and particularly Adeel because about this in a second. One of the things that we as campaigners struggle with is how do we get the last mile or few yards? It's like the sort of broadband argument of it goes to the footpath outside your house, but getting it inside the house is always the hardest bit. And how do we get to the last few yards to the small business to help them understand, A, what they're entitled to, and B, what good looks like in terms of contract negotiation, and see how to use all of the tools and the methods available to them, because they don't have that confidence. And I think, I'm ex-KPMG, but I haven't worked in a small accounting firm, but I think there's a big opportunity for people in the accounting profession to do more good quality business advisory work to help their clients in this respect, because they do become trusted business advisors. Anybody got any views on that? Would like to share a view? We've got a microphone coming to you at the front here, if you can, please.
I work in a medium-sized firm. I've worked in smaller firms too. I think the problem with I'm a chartered accountant as well. The problem you face with an independent accountant is if they start advising their client, they could potentially become a shadow director. So I think you'll find that the smaller account. I mean, you disagree with me if I'm wrong, but I would. That's my first thought on your comments, is that can
I just ask a follow-up to that point, which is, does that mean, is there a role? Is there a useful role those folks can play? And if so, what help would they need?
Absolutely. But if you've got to play an audit type role or a tax compliance type role, you've got to be a little bit independent from your client. So giving that advice to hit back at the big customer isn't always natural to them. It's not in their day-to-day practice, if you like. It's not their routine job. They're more compliant. And the other point that you're making is that large businesses, they're taught to squeeze their suppliers for payment. It's part of Porter's model. is the relative power of the buyer and supplier. So I think you've got to you've got to hit the people at the top somehow.
Yeah.
Yes.
You've got
And
to target the larger business. You can't to say the small business has got to fight back. It's not going to work because they are going to switch.
Yeah.
They'll switch to whoever's going to give them the longest payment terms because they can earn interest on that and reduce their loan requirement.
We are very clearly hitting the big businesses. Yes, of course. That's what I say. We're working the small businesses and the big businesses. But I actually would push back against what you've just said because I think there are an awful lot of big businesses really going the extra mile and spending millions of pounds to put better systems in place in order to get better payment services. And we know this partly because Terry's been charting how much improvement we're seeing because payment practices of the biggest firms have to be reported to the government twice a year, and those figures show the improvement that's coming down the line. However, as the economy deteriorates, we do see that pulling back again in longer contracts.
Yeah.
So one last point. Sorry, I don't want to hog it. I work in a medium-sized practice company, and we've got a turnover of about 80 million. We deal with lots of high street companies. They are putting in these systems, portals, etc. Obviously, with the digital age, I was thinking I was going to want to reduce my staff. I've gone from 6 people to 10 now to cope with the complexity of these new systems.
Yeah.
What the software providers are doing is they're selling the accounts payable software to their customer. I as the supplier have to put all my information on there, but what they're doing is they're adding more and more information we've got to put on. So you have to put the worksheet to say that your plumber or engineer or whatever he does, he has to say, right, here's the detailed information for that job that I've done, which is fair enough. But then you've got to put a picture on there. Now the next thing is you've got to put a picture on there, and it's just adding to the workload. And I've got people sitting there watching little wheels go round on the screen while they're waiting for these pictures to download.
Right.
It's just a waste of time.
Yeah.
It's adding burden. It's not reducing.
So it's adding to the
Technology
complexity,
making it
right?
work.
Yeah. Yeah. Chip, do you want to respond to that?
I think for me, it comes back to what's the problem we're trying to solve, right? I think we look at the front end, which is the receiver of the payment, saying, how do we make it easier for, the customer or the buyer in this case to make a payment to me as the supplier? So we digitize it, right? And I go back to my business process re-engineering days, and the only thing technology does is take a bad process and make it faster. Doesn't change that it's still a bad process, right? And so how do we fix the process? How do we improve the process of the internal processes of the company that's having to make the payment? We can make it as fast and as easy and uncomplex as you want for the buyer. However, when they go to make the payment, their internal processes could be the restriction for why things are being paid late.
Yeah.
One, we know for a fact companies want to take to the last day of their payment for cash flow purposes, right? For the float on that money. You look at the card schemes, for example. Companies that do pay fast, they're still taking, because they pay via card, for example, they're still floating another easily 60 days of float of cash before they have to make the payment on the card. So they leverage both, right? They leverage the terms that they already have with the supplier. And then what they do is they put it on a card, perhaps, and then they get another 60 days of float on that cash before they have to make the payment. So I think we need to kind of turn this upside down a little bit, in my opinion. We've done a lot of things, and I'm not trying to speak about Sage, but we've done a lot of things at our company where we've improved the complexity of the workflow to digitize the process, where it's embedded into their accounting workflow. It makes it easy for them. They have the ability to put the invoices out on a payment portal, so the companies don't have to do any kind of integration to make the payment. They just go to the portal. They have a Pay Now link. It has a checkout. They can pay in any kind of payment terms, any payment scheme they want, whether that be account to account, wire, card, bank, account to account being bank to bank transfer. And I know you all are familiar with that, obviously. But in the complexity of making that easier for the end customer, the buyer, if you would, we still see that there's an internal process with that we've got to fix. And so we're working heavy on the digitization of this, but to me, there's an underlying issue still with the process.
Yes.
I don't know if that makes sense.
In fact, Adeel and I were talking about this before we came to the stage around how long it takes to open a bank account. So your accountant can open a company very quickly. I might open a company and say, let's get started. We'll go and find our first customer. But you're reliant as the accountant on the customer getting a bank account fixed up. But I might say, well, I won't do that until I get my first customer because I'm not going to spend too much money. And so then you find out when you go to get that bank account, it can take quite a long time to open. But hopefully you're making that bit simpler.
I mean, yeah, it's been fascinating moving to Starling because my onboarding team started freaking out at one point that the queue to open an account had gone from 4 hours to 6 hours. And I was like, that's actually pretty good. Like, you're freaking out about going to 4 hours to 6 hours? But that's the sort of level the bank is operating at, which is anything more than 6 hours is actually really bad. So there's definitely ways to digitize it and make it faster. I think I want to take a step back to a point Chip made, which is there's internal tools and systems, definitely, but a lot of this is about culture and awareness. So at some level, you have to decide or help people decide that they're going to treat this as a serious issue. And you have to sort of walk the walk.
Yeah.
So at Starling, for example, we made the decision that we want to pay suppliers on time. We went for the Gold Award. So we pay 95% of our suppliers within 7 days. In enforcing that through the organization, it started to throw up all these system issues. Everyone was just like, we need 3 passwords to get there, and it's so hard that we just don't bother. And they're like, oh, so we need to put single sign-on in. And in doing so, suddenly everyone started sort of paying these invoices on time. So it just kind of forced us to, take out the crappy system and put in the single sign-on in the better system. Because once we set the ambition and the goal, which was it has to be done in this time for the customer or the supplier, it drove but we can't because we don't have the right system. What's missing? Tell us, we'll change it. But it's all like it's the whole tone from the top thing. Unless you decide that this matters and we're gonna do something about it, it doesn't happen. The tools are there. It's just the focus on driving towards it.
But do you actually think at the top people know enough about the processes? Does the board know? Do the investors know? Does the CEO know? Even the CFO in lots of cases says, oh my God, I didn't know that happened in our organization. Yeah. And the goal that you're referring to is the Fair Payment Code that we launched at the end of last year. If you want gold, you have got to understand your processes.
That's it.
And that is exactly what's happening. We have had fewer big companies get gold because they've suddenly realized they're not at gold standard. And so we're working with them to push them to gold standard, but they're discovering all sorts of little quirks in their processes.
Tell us a little bit about because not everybody might know about the Fair Payment Code, how it's set up and why it exists. And also, of course, some of the other changes that might be coming, from the government to try and help change payment culture.
It's all about changing culture, and we've known that for a long time. Culture is behavior, how companies behave. And Terry, I mean, you've looked at change in leadership and the difference that's made in some companies. I have a wonderful example of a household name where a new CEO walked in and went, what on earth is going on here? And said, no, we've got to change that. And we saw payment processes change to the point where average days to pay dropped significantly. But it takes quite a long time. It just doesn't happen overnight. So it is about culture. And the Fair Payment Code is about trying to get companies to look at their processes, look at how they can improve things, and pay gold at least 95% of your invoices in 30 days. And that is a signal from government that we want to see people paid within 30 days. Me as a small business person, I'm saying I won't pay much quicker than that. And we are seeing companies paying quicker than that, but it isn't always possible. Even with all your accounting software, etc., and all the tools, it isn't always possible. So the silver award is for people who are paying, firms that are paying their bigger companies in 60 and their smaller companies in 30. And then they tell us they can't identify who their smaller companies are in their supply chain. So we need to be looking at how do you know who your small companies are? Well, the obvious thing might be to ask them when you onboard them, but if you've got 250,000 companies in your supply chain, it can be difficult. We know that. So we're working with them to try to get them pushed up to gold level. And similarly, bronze is for those companies that are paying everybody within 60 days, but want to get to silver and then to gold. We're not allowing people to languish on bronze, but it is about a clear signal that we want to see quicker payments. However, if your contract says 120 days, you're not going to get on the fair payment code, because that to us is not a fair payment. So again, we want to see the contracting improve.
Right, want to make sure. Have we got questions or comments from anybody? Anybody like to comment on what they've heard, ask a question? Just check in, because we've got 10 minutes or so left.
Question for Adeel. We're talking about the leverage of big companies versus small, the whole port of five forces thing. One of the big players in this system are the banks, alongside government. So the things the government's doing to improve the practices within big companies. But what can the banks do? Now, for instance, if you take a loan out, the banks typically have a cash flow covenant. Have you thought about, when you cascade things through Starling, you thought about when you give those loans, whether you're allowing the people you lend it to prevent those people from extending their payment terms? So to meet the cash flow thing, are you going to look through how they extend payments to small companies and instead focus rigorously on what the true cash position is?
I think that's really spot on. The banks can play multiple roles. I genuinely think the first one is very much around the culture and walking the walk and actually just paying their own suppliers on time, right? If you don't get it right yourself, you're not going to help others get it right. I think the second piece is around those digital tools that we talked about and making them easy to access and all that. And then I think that's something that's already happening. The third piece is, to your point, around some of the products and how they're set up and what the knock-on effects are. I don't believe we have those kind of covenants, but we don't particularly do that kind of lending either. We're much more about the overdrafts and sort of the short-term working capital kind of lending. But should we go into that kind of space, that's a useful tip, thank you, to consider. And then I think the final piece is around the role we play in the ecosystem, which is the relationships that we have, which is why we've got someone like Ollie, who's our head of accountancy partnerships, working closely with accountants to try and develop that understanding of what banks can bring, helping our customers understand what accountants can do for them, and just being close in what we're telling small businesses about what the options are to them. So it's actually across all of those things that we can play a role, and certainly that's how we're trying to do it.
Okay, any other questions?
Just one quick idea on large businesses knowing which are large or small customers. They will use a credit rating agency which uses company. They will use a credit rating agency that uses company numbers. They could quite easily get a report that would tell them whether it's a large or small company, because the turnover's on there as well. And I think small companies will very soon have to declare their turnover in their accounts, so that will all go onto the credit rating agency information.
Good.
Yeah,
We've got
they
a
do.
question.
Hi there, hope you can hear me. I'm very interested in the fair payment code, and a question for Liz. How successful have you been in incentivizing these large businesses to adopt the fair payment code? What kind of benefits exist for them? And how sort of deep, how has adoption gone amongst those larger businesses? And finally, is there sort of scope on the roadmap to work with software vendors to help publicize the Fair Payment Code? Because I think about the work that Sage, for example, are doing. They could really help sort of push the Fair Payment Code and make it really attractive to these larger businesses. Thank you.
Thank you. I didn't catch all of that. But big companies are struggling to get on because it's much more onerous than the previous prompt payment code, where they could simply sign up. You cannot just sign up now. You have to provide evidence. We want to see examples of your contracts. Adeel's been through it. He knows.
It's a lot of work.
It was hard work. He didn't get there immediately. But the big companies are working on it, and our team is working with them. What we don't want to do is say, no, you're not at the standard, so go away. If big companies are willing to join at bronze, more of them would join, but more of them want to join at silver, so they want to do the work in advance. If we bear in mind it took 16 years of the prompt payment code before we had 5,000 signatories, then obviously this has just been going since just before Christmas. It will take a while, and that's why Sage, Xero, Free Agent, Intuit are all doing what they can to promote the Fair Payment Code as well, through events. Sage had a big event in the House of Commons yesterday. I think the Fair Payment Code, it's safe to say, was mentioned 6 times, and that was just at that one event. So we're all working together to try to get the message out as best we can with trade associations and everything else. So in the construction sector, we're working with Build UK. We've done a series of webinars. Terry has been involved in some of those as well, and with the small business organisations too. I think you asked about benefits. I think there are a lot of firms have realised that the benefit of having the logo on their website is that suppliers will be more likely to want to work with them. But interestingly, we are seeing suppliers beginning in larger numbers to walk away from customers that don't pay quickly. And I think that's beginning to build as well. I think when the tipping point comes, we'll see big businesses flooding to get their fair payment logo.
Okay, we've got a question down the front here, and then one just behind.
Hi, it's just really a comment. We're saying small businesses need to do this, and this is available, and you can access this information, and you can see how you can get payment. I feel drastically sorry for our small businesses. I'm an accountant. We've got MTD coming. We're trying to get them digitalized. They still need to go out and earn their money.
Yes.
They can't employ extra people to do all these extra services. And we're just layering more and more and more for no benefit that they can see immediately onto those small businesses. And they're drowning. So it's really just a comment. Yes, it's all fantastic in the wonderful world. Yes, we would all like to get paid earlier. But these people are doing it at 8, 9 o'clock at night after they've done their day's work. And sometimes they're knackered. So it's just a fair comment. We need to be reasonable to how much we can offload onto the small business world.
Yes, well made point. Very good.
Hi, thank you so much for all your inputs. This was a very interesting panel. Also great to learn about the Fair Payment Code initiative by the government. I'm Seren, CEO and co-founder of Delphin, and I wanted to ask all the panelists basically one thing. Why don't we use financial incentives to incentivize the larger companies to pay sooner? Why don't we try to find the sweet spot that will actually encourage them to release that excess working capital that they are sitting on, and really try to facilitate the gap between the smaller businesses and larger businesses? Because at least my little take on this is that everybody has a price, and depending on let's say what kind of percentage that you can offer as a discount or a cashback or an incentive, in any other means, that we can potentially incentivize these businesses to pay the smaller businesses sooner. And I'm curious if you have any thoughts on that. Thank you.
Very interesting. Right, have you got a few on that one?
Yeah, I think you're spot on. right? I think, one of the concepts, that we launched, and I'm not trying to compare, God forbid, the US to the UK, but, is dynamic discounting, right? The faster you pay, the more discount you get. Because when you think about it, a lot of even the suppliers that are waiting to get paid, right, don't really understand the cost of the float of the money that they're out at that point. And if you think about dynamic discounting, if you can educate the business owner to realize, look, even though you discounted this much, you're still saving this much because of the late payment, right? So dynamic discounting is one of the key elements I think that we ought to be, I don't want to solution it here, but it is one of the areas that we should and think about to look at. But anyway, I agree with you, dynamic discounting or discounting, incentivizing the supplier that's billing to the customer that's making the late payment, I think is one of the things that we should look at as a solution set.
Liz, any idea on incentives?
Part of the solution, but I don't want to see solutions that penalise small businesses, because if their margins are reduced any further in a lot of sectors, they will simply not be able to bear the cost. And if they can't bear the cost this time round, they're going to put their prices up next time round, and then we're seeing that price increase going back up the chain.
I think my view on this would be, the minute you put the financial incentive, you're also effectively saying that there is a price for this, and if you're willing to pay it, you can do it. To me, I go back to the cultural point. This needs to be a cultural behavior that's not a good behavior. So it almost shifts the burden off, and you don't want to set up the equation necessarily to do that. There's aspects where it makes sense, I think, but by and large, you want overall the ecosystem to behave in a way that's not a good behavior.
I think one of the other things, and I'm not trying to promote a brand here, but I do think one of the other things that we can look at in terms of late payments is account-to-account transfer, right? And when you think about companies like a Go Cardless, for example, in the UK, who has the direct debit, right, with the mandate. So at the time that the transaction occurs, they're pulling the money immediately out of the bank account. That helps eliminate late payments, quite frankly, right? And so looking at things like account-to-account transfer, that technology, that capability, direct debit with mandate, I think are some of the things that suppliers should think about when they're dealing with their customers.
And a lot of micro businesses are doing that. They're simply not offering trade credit of any sort.
Okay, there's it's a very good question. Have you got a question or a comment?
I'm actually wondering, how are actually the neobanks and accounting platforms working together to get SMEs paid on time faster?
Quite a bit, actually. I mean, the first and foremost is building really live instant sync integrations so that customers have that latest up-to-date view. They're not waiting a day, or they're not waiting whatever. The second aspect is that it doesn't fall over. Actually, we invest quite a bit of capability in making sure that those are highly reliable and sort of APIs. So I think that's at the foundation of it. There's other pieces where we're collaborating around. When you're doing your invoices and everything, they're synced up to the bank account, so you can, all of that is integrated as well. So actually, there's multiple levels, and the whole point is the customer may choose to do it at different interaction points, whatever suits them. I think we recognize that actually whatever they choose is up to them. We just need to facilitate it wherever it is.
I totally agree. I think, the launch of open banking back, what was it, in 2018, I think, here in the UK, right? I think opened up the data sets for companies like Sage to work with companies or banks like Starling and others in the market to have access to that bank data that is then transparent to the customer or to the buyer even at this point, right, within their accounting platform. They don't have to leave their platform to be able to go out and see what capabilities they have from a cash flow standing. And so I think the use of data and the synchronization of that data across the platforms, I think, is a key element of helping companies understand what is their cash position, so I know whether or not I'm able to make that payment. Oftentimes, small business owners, what I hear is they delay payments because they're more worried about making their employees' payroll that month, right? So they're thinking, which is more important to me, getting my supplier upset or getting my employee because they don't get their paycheck. So these are the kinds of things we need. And I think the banks play a big role in that in terms of whether that's through invoice financing capabilities, so it's dynamic, so the customer always has access to cash. I think there's a lot of different methods that we need that we've started to explore but haven't really delved deep enough.
Just from my perspective, in sort of closing a little bit, really, my experience of the banks and the accounting software providers is that they are working very closely together to try and make the experience for the end users fast and easy. But you need end users to be able to do that really well. And one of the things I see with the accounting profession is you are very, very close to the end user in a way that in many towns, the bank manager's gone, right? The bank has gone, the advisors have gone. So you might be the last post in terms of being with those small businesses. And we, and I'm collectively talking about we on this side, need to hear what the problems are, where the problems are, and where the blockages are. Good Business Pays, by the way, is a free resource for all of you to use. So do go to the site. You'll see there we have the lists of fast-paying big companies, the naughty steps, the slow-paying companies. We list all of those. We put financial risk profiles on there for every company. So that's free resource for all of you to look at. We do a monthly podcast, and we did one with open banking quite recently. It's called The Weight Watchers Show. WAIT, not how much you weigh in this occasion. So have a look at that. Again, all free for you to use. In the meantime, thank you for coming, and thank you to Chip and Liz and Adeel for a great session. Thanks everybody for coming.
Please show your appreciation for our moderator and panel.